Hi, my name is Glenn Hasselman. Just making this video for the use of free accounting software to show you guys some more information about processing leave in free accounting software. So I've previously done 2 videos on the annual leave and how to accrue it and how to pay it out. In this video I want to cover rostered day off, and it's a little bit different because with rostered day off you don't actually accrue leave per the accrual rates. You bank it, and then once you've accumulated enough, then you take it. So I've done the setup, and I'll just walk you through that. So first thing to set up are some accounts, and probably the most obvious one is rostered day off taken. So go and look at that first. Set up as an expense account. Active is true. Let me just show you that this is the taken account. The apply super is true and apply leave is true. So when an employee takes rostered day off, they get paid super, and they do accrue leave on top of that. The default tax code is rostered day off, and in this setup I've just got one tax code that I'm using across these. What I've set up is actually 3 accounts. Payment deduction type is earnings bracket including leave taken, so we want it to be selectable in that section of the payslip where we put the employee's earnings, and the normal rate multiplier is 1, so when the employee takes rostered day off, they get paid at their normal rate of pay. Okay, there is RDO banked hours here as well, and that is used for when the employee wants to bank hours into their RDO balance. So classification reference expense, active true, apply super true. So when the employee banks hours, it reduces their pay. So it will actually reduce the super and leave accrued, but that's okay because with the RDO taken, when they take it, it's increased, so it all balances out. The default tax code is again RDO, and it is again in the earnings section on the payslip, and also at 1 times their normal rate of pay. So RDO banked hours setup is actually exactly the same as RDO taken. The only reason for setting up a separate account is so that on the payslip you can actually show the different name of that line. So when they bank it, it'll say RDO banked hours, whereas when they take it, it'll say RDO taken. You could probably just set up one account and call it RDO, and the employee can clearly see whether it's being banked or taken because of whether it's a plus sort of 7.6 hours or a minus 2 hours. So you could get away with combining these. Another account I've set up is rostered day off expense account, because even though the leave is not accruing using an accrual scale, it does need an expense account, and for a couple of reasons. So anyway, classification reference is expense and active is true, apply super and apply leave are false. So this is the accrual off the leave. It's not something they're getting paid, and therefore there's no sort of super and leave on it. I've linked it to the RDO tax code that's been set up, and I'll show you how that's set up in a moment. And the payment deduction type is leave expense. So this is used on the leave accrual line on the payslip. Now that's one reason why we need this separate account, because it's recorded or set up here as leave expense. So the other reason why we need this is that whilst normally you have there'll normally be zero put to this account. There won't be an amount because there's no expense. It's being banked and then paid from that RDO bank. But you might have a situation where an employee's rate of pay changes. If it goes up, then there could be a expense created because the provision would increase in value even though there was nothing actually banked if the rate increases. Okay, so I'll show you the setup of the tax code now. Okay, so it's just one tax code called rostered day off. Tax percentage rate is 100. So for the banking and the taking of leave, it's all 100% tax or provision. Tax as being a broader concept than just GST and tax and pay-as-you-go tax and that kind of thing in free accounting software. Active is true. It's a liability. So when the employee banks RDO, it goes into balance sheet as liability to be paid to the employee. Leave category is RDO. The BAS classification is salaries and wages, and that relates to when the employee is banking and taking RDO. It'll be reported as salaries and wages. I do want to point out that we've also used this provision on the RDO expense account, which is not going to go on the BAS. But the trick there is that the gross on that line on the payslip is always going to be zero. So there won't be any, there's no pay actually associated with that accrual of leave if there is that. So it's okay to use this tax code on the RDO expense account. It's probably a question you weren't really asking, but if you set it up like this, it will just work. And the payment summary or single touch payroll classification is individual non-business and individual non-business gross. Again, that relates to the RDO banked and RDO taken. With the for when it's the RDO expense account, it's a zero. So that accrual is not going to put any amount into these classifications. This can be set up, or you could set up a separate tax code for the RDO expense account and put these as all not applicable on that, but it's not necessary because it's a zero on that account. Okay, anyway, we'll process some payslips, or hang on, I'll show you the setup of the RDO leave provision, or the leave type. So in the leave types, I've set up this RDO leave type, and it's just called rostered day off. It says display on payslip yes. You could put no, although I think that wouldn't be a good idea for rostered day off, or any leave. In fact, I think it's better just to display it on the payslip. Leave provision tax code is, well, we've only got one tax code in this setup called rostered day off, and leave expense account is the RDO expense account. And that's important. You can't use the banked or the taken RDO accounts here. It has to be the expense account. Category rostered day off, of course. The accrual scale. Now that's blank because there is no accrual. They don't work. You don't get it by working normal time and then accruing like annual leave. And the accrual rate I've set to 0. You could also have it blank, but I think it is probably better to put a 0. Okay, there is one other relevant thing in the setup before we process a payslip, which is on the counterparty under the payroll details and leave entitlements. We've got this RDO thing here. So previously we had, in the two previous videos, I showed the setup of this annual leave. Once you've set up a leave entitlement, it gives you an option there for the new one, and that's I've put in this service start date here. It doesn't really care what the service start date is, that's just for your information. What it does care about is that there is something there. It could be a future date or date in the past. I actually just picked the date, which is the start period from when I started processing RDOs on this employee. If you've added a service start date and you didn't want to, you can click this delete and it deletes it. If you go then to the list, you'll see there's nothing there. So this employee would not be accruing RDO on the next payslip that I processed. But anyway, I better put that back. Okay, so now let's have a look at some payslips. I already processed one, I'll just quickly show you that. So so the normal way, the normal working roster would be to work 40 hours a week and then bank 2 so that you have a 38-hour week, and over a period of 4 weeks it will average at 38 ordinary hours per week. So I've got the normal 40, the banking of the 2 RDO, and down here the RDO entitlement. So the RDO is you can see the accrued quantity and amount is 0, but it does record the closing quantity and closing amount. So I've processed 2 weeks of pay, so that's 4 hours, and the $30 per hour is 120. Okay, so I'll just process another. So keeping in mind that we're sort of starting with 4, I'll process the 3rd week's payslip in this sort of 4-week cycle. Do a new batch. And we're up to. Actually, I'm not sure where we're up to. So this was the payment date 12th of May. Ending 17 May 2020. Oh. New payslip, pick the employee, normal time 40, add a line and pick up banked. So it's a -2, it's a bank 2 hours RDO. So again, it's 0 by accrual, but we've moved the closing balance to 6 because we've banked 2. So we started with 4, banked 2, taken it to 6, and then save that. And let's have a look at the pay slip. So there we've got our banked hours of 2, and on the under the leave entitlement section we've got the roster day off 6 hours and the entitlement amount. Okay, so the next pay cycle is the RDO taken, so let's do that now. So new batch. Pretty sure I picked the right date, but yep, going to the 26th now. Okay, new payslip. In this case, the employee will not have worked. This is the fourth week in the this is the fourth week in the 4-week cycle, so they won't work the full week. They'll work 8 hours a day for 4 days, which is the 32 hours. Then we add a line and we put the RDO taken, and actually not quite right. We still need to bank some RDO, because on those first 4 days in this week, they will bank some RDO. So it's 2 hours for the week, but it's actually 0.4 for each day, so it's a minus 1.6. Okay, now if we look down here at the leave accrual section, it's got the closing quantity of 7.6, so it has increased it from 6, and 7.6 is the is the 38 hours per week over 5 days. So that's the average hours per day. Now we want to add the RDO taken, and when they take the RDO, they get it at 7.6 hours. With that 7.6 hours RDO being paid out, the closing quantity becomes 0, and the closing amount becomes 0. Save. Just a quick look at the payslip. Roster day off entitlement is 0. You can see the RDO banked and RDO taken in the payment section. Okay, so that completes the setup and payment of RDO in free accounting software. I do want to show now one extra technicality is what happens with the rate, employees' rate of pay changing, because that occasionally happens and could be confusing as well there. Now this employee has got 0 entitlement, so if the rate of pay changes right now, it won't matter. It'll be fine, because their entitlement or their provision of whatever their rate is, the amount is 0. Okay, so what I'll do is process one more payslip on the next. Just do this as a totally normal payslip. So after processing this payslip, the quantity that they're entitled to is 2, and the amount is 60, because it's $30 per hour. So I'll save that. But then let's say their rate of pay before the next week. Their rate of pay changes. So let's go and update the employee's rate of pay. Payroll details. So currently sitting at $30 per hour. Let's say it just goes to 32, and I'll just delete that because I'm not sure what that works out as an annual salary. I'm sure the 60,000 wasn't scientifically worked out as well, but anyway. So let's see what it does on the next payslip, keeping in mind that increase in the rate of pay. So we're now up to the pay of the 9th of June, and from 1 June to 7. New pay slip. In fact, it's already doing something interesting down here, which is that it's carrying forward the 2 hours entitlement from the prior week, but it's calculating that the closing entitlement is 64 because the normal rate of pay is now 32. So that is translating to a $4 expense that will actually go to this RDO expense account. Although the quantity accrued is 0, the amount to balance to their closing entitlement has to be a $4 amount. Now, I previously mentioned that, and it's getting technical, I guess, but that the gross on this account is always 0, and that's this amount that's actually displayed here is actually the provision amount. It is not the gross amount. The gross amount on this line is always 0, and that's sort of behind the scenes a little bit, but the gross amount is the amount that's being paid or received, and this amount, or these accrual amounts and this super amount, do not affect this amount paid or received. So yeah, the gross amount is 0. Anyway, so normally you would have your banked hours of -2, and that will flow through to your closing quantity, and that's or closing quantity, and then the amount here is going to be 4 times 32, and that entering that line there hasn't changed this $4 amount here. So that's the extra accrual that's required to account for the increase in the rate. So I'll save that, and just going to in fact, we'll have a look at the profit and loss for June to see this RDO expense. So normally with RDO there is no amount that goes to the expense account, but in this case, because we've had the increase in the rate of pay, we've got that $4 flowing through to the profit and loss. RDO banked hours, as you can see, is 0, and there is a quantity associated with it there. That's fine. There is a gross here for the amount that was deducted, and that's just for information purposes only. Really, the column that's these sort of quantity and gross columns aren't actually on a lot of profit and loss reports that are produced. I think they produce quite good information. The net amount is the column that is the main column for your profit and loss, which sort of all accounting software will produce. Okay, so anyway, the main thing I wanted to show here is that that $4 does flow through to the profit and loss. And there's the gross amount actually. As I mentioned, the gross amount is 0 on those lines on the payslip, and that is flowing through as a 0 over here. Okay, so I think that was a lot of information, but that does hopefully tell you how to set up RDO in free accounting software. And thanks for watching. I hope the video has been useful.